Hi, let's go ahead and talk about section 5.2, which is on all the services and fees that banks have. And trust me when I say they have a lot of fees. So the first slide just kind of talks through what their services are. So the first paragraph here, a full service one, has lots of different things, and we'll have a slide on each of those talking about what they are. As well as fees in the second bullet point. The most important, though, is this third bullet, which says that the federal government, in essence, the FDIC, protects certain banks. So most banks are FDIC insured, and it's just a type of insurance where it says if I have $100,000 or up to $250,000 in an account with them, and the bank goes belly up and fails, that the federal government will pay me back my amount that I have deposited at that bank. So you really want to try to put your money in banks that are FDIC insured. And again, it means the whole bank fails, not just the branch that you're located at. So Fifth Third Bank, if the entire bank collapses, which is why the federal government bails out banks a lot, because either way they're paying the insurance or they're paying to keep it continuing. The next thing that we're going to talk about is guaranteed payment checks, and there's different reasons that you would do this. So one of the reasons is if you owe me money and you have bounced a check or two with me, which gives me great concern, then I might say you need to give me instead a certified or a cashier's check, which is more safe. So a certified check, the key is it's still your check, and the bank is going to guarantee and certify it to cover that check. So even if you end up not having sufficient funds in it, the bank will guarantee it, and we pay a fee for that. Then there's a cashier's check, which is the bank actually writes the check, not you, but the bank. And the bank then in essence is making sure or guaranteeing it. And of course, as you would expect with all of these, I'm not going to read the Travelers one, with all of these, there's a fee that the bank is going to charge to allow you that service. All right. In section 5.2, we're going to talk about all the services banks provide as well as the fees that they charge for all those services. And trust me when I say there are a lot of fees that they charge. So let's first talk about full service banks. In these first couple bullets, it goes through what all the services are that most offer. And we'll do a slide or two on each of those as we get going. So what I wanted to really explain is this third bullet, which is important. So when you choose a bank and you put your money with that bank, you want to make sure that they're FDIC insured. And all that is the bank takes out an insurance policy, in essence, with the federal government. And the federal government then is the one that will assure or protect deposits against loss up to $250,000 per account, it says. So I bank at Fifth Third, and what that's saying is that the entire Fifth Third bank has to collapse before I could collect on that insurance. So if I had $100,000 with them and it failed, and I lost my $100,000 when the bank failed and didn't have any money, then I could do an insurance claim and get the $100,000 back from the federal government because they're FDIC insured. So that's just the type of insurance policy. The next thing that we want to talk about is guaranteed types of payment checks. So the two that are most important here, the traveler's check you can read on your own and it's self-explanatory. But certified versus a cashier's check. So what in essence is happening is if you're my customer and you bounced a few checks with me, I may ask you to provide instead either a certified check or a cashier's check. A A certified check, you still write it out of your account like normal, but the bank guarantees that it will be good. So what the bank in essence does is charge you a fee to do this, and then they take however much you owed me out of your account already before it gets presented to them. So they kind of set it aside. And then a cashier's check is even better to most people because the bank is the one that's going to write the check on their own account, not off of your account, but it's written by the bank, and then the bank goes ahead and takes the funds out of your account immediately to cover that check and put it in theirs. And they charge a fee for that. As you would expect for all of these, they charge a fee. The next service that banks do are money orders, and money orders are things that they will sell to you if you don't want to use cash or you don't have a checking account. So you again pay them a fee, and they will issue a money order to pay for something. The next thing that we want to talk about is debit cards. And debit cards, I think a lot of you might have them actually, or will probably in the next year or two. But it's just like a credit card, so it's a plastic card. And when I go to Walmart or wherever and I swipe it, it takes the money out of my account instantaneously. So it's a form of cash, only it's a piece of plastic, basically. Credit cards are the next service, and hopefully most of you know about those. Visa, MasterCard, American Express, Discover. Most full-service banks will do that. And you get the card, and when you swipe it, they don't take the cash out of your account. Instead, monthly, they will bill you, and you'll have to pay for it then. So you've basically gotten 30 days of free credit. And of course, as it relates to fees again, most of them will charge an annual fee, $50 to $100, and then interest on unpaid account balances, which we will talk about in a later chapter. We have overdraft protection services, which will basically say that if someone presents a check, they will go ahead and pay the check, even if you don't have sufficient funds, and charge you a fee basically for overdraft protection. So if it would have bounced and insufficient funds were in there, they'll charge you basically a fee or one time or a percentage to cover their risk that they had to take on. The next service is automated teller machines, and hopefully you guys know what ATMs are. You got a card again, and I can get cash or anything out of it. You can get an advance on these things. It's just really convenient, and you have to know your PIN. Online and telephone banking is exactly what it sounds like. A lot of people now are doing online banking. I don't think telephone banking, honestly, hardly exists at all anymore. So I can pay bills, I can transfer money, I can make deposits, I can do a lot of things online now. They also encourage electronic fund transfers, which is just basically using electronic computer-based systems to enable moving money amongst people. Then this next service they provide is stop payment orders, and it's a request for the bank not to honor a check. It happens a lot. People do it when their checks have been lost or stolen, and banks charge a fee for stopping payment on each check. So the one tip I would tell you is, if you think about that signature card that we talked about when we opened the account, where we signed our name, however we're always going to sign it, and the bank cannot take money out of my account unless it was my signature on the check, so they're responsible for that. It's silly if you've lost checks or they've been stolen to put a stop payment on it, because whoever signs that check is obviously not going to have the same unique signature you have, so the bank should not cash those, and if they do, it's their responsibility. So tell your bank if you've had them lost or stolen, I'm telling you this as a courtesy so you don't end up cashing checks and have to cover them. So just know that they try to fee you, but you shouldn't pay a fee. Safe deposit box. That's where we can store a lot of our valuable items or documents. Keeping all of those important things in a safe deposit box that's fireproof, all those kinds of things, is a really good idea. They charge a yearly fee based on the size of the box, and there's lots of different things that people might put in them. And they've listed the things here, so the different certificates that you have, deeds, mortgages, titles to cars, things like that, stocks and bonds. Some people put extra cash in it, and then kind of your specialty items. I had one at Fifth Third, and the lady that opened it for me the one day told me the scariest thing that they found is someone put a stuffed cat in their gigantic safe deposit box, so that's kind of creepy. They also provide other services which are really far down the road for you guys, probably on loans and trusts, maybe loans sooner if you've gotten a car or you're going to have school loans. And then they'll set up trusts for you that manages property on behalf of whoever is in the trustee. So the next thing is a notary public, which is another service they provide. A notary public verifies a person's identity. They'll charge a fee again to get something notarized and stamped showing that it's valid, that you signed it. And then those were just other financial services that a bank might offer. So that ends all of the services they offer. So then let's talk about the fees. And they'll charge fees to their customers to help cover the operating costs, having bricks and mortar and paying tellers and things. You need to choose the right kind and shop around and find an account that's right for you. And we have a video that tells you kind of how to do that. The thing that you need to remember, though, is banks are for-profit businesses. They're trying to make money, and the way that they tend to make money is by feeing you to death. So I'm just going to put all those fees up there on the schedule. Those are all things that they can do. So this check cashing and per check fee, they'll do if you don't have a lot of money with them. So they'll charge you for all the activity that you're going to have, writing checks or cashing checks, making deposits. Then monthly service fees, almost all checking accounts have that, but the more money you have, the more likely you can get that fee waived. The same on overdraft fees. We've talked about it in NSF check charges. ATM transaction fees, typically they won't charge you anything if you're using their ATM machines, but if you're doing international or otherwise, other banks, they might charge you. And then, obviously, to have a safe deposit box, here's another usage one, minimum balance fee. So if you don't have at least $1,000 with them, then they'll charge you every time you fall below that. So if I write a check and it dips below 1,000, I'm not keeping my minimum balance. They'll charge me a flat fee for falling below. And then there's all these other fees too for canceled checks and online bill payments. So they have clearly a ton of services, but even more fees. Choose wisely.